This is the biggest question confronting the oil industry and is about what's going to happen when Western imposed price caps on Russian oil come into effect. It's a huge variable, whether it's for traders, oil tanker companies, and of course the world's most powerful governments, on one of the most essential commodities in the world, something on which so much of our lives depends on. Oil, the liquid gold. Can the petroleum industry's supply chain handle what is easily going to be the harshest sanctions exports on Russia? What is likely to happen is that a lot of trade of Russian oil could move from mainstream legitimate markets into what's called the shadow or grey markets. It's technically not illegal, but not entirely above board either. A vast shadow of tankers with unknown owners is being amassed in the last few months to service this grey trade. Intense US-led diplomatic negotiations have been going on to try and soften these sanctions, primarily that are being imposed by the European Union. But as American officials insist, this is a ticking time bomb. So is there going to be enough time and space? Remember, there's just about 4 weeks before that December 5th deadline hits. On CRUX Decode, can Russia, the world's third largest oil supplier, continue its operations despite these severe sanctions and price caps? What steps would be needed to be taken by Russia and those countries which buy oil from Russia to keep this trade feasible and profitable? If Russia suddenly turns the tap off and drastically cuts off its exports, then what may that mean for both Europe and the big oil-guzzling countries of Asia like China and India? The United States for some weeks now has been sounding the alarm for Europe's sanctions on Russia that could trigger a huge shock in the international oil markets. America has been pushing for companies to be allowed to access EU services, particularly insurance for these oil exports, to avoid a sudden price hike. And of particular concern is any kind of price hike before the US midterms in early November. To do that, the oil buying countries and companies would have to sign up to a controversial oil price cap. Now, what looks certain is that a large part of Russia's exports will be handled by a complex and even secretive network of ships, owners, ports, and safe passages. This will mean that countries like Iran, Iraq, and China, which are willing to and happy to do business with Russia, will come into more play. The most important question then is, will there be enough ships to facilitate this secret trade? Now, shipbroker Bremer estimates that to support 4 million barrels a day of Russian exports, then there has to be anywhere between 500 to 1,000 ships to this new fleet. There's been a sharp rise in the tanker trading since this war began, and particularly in the last couple of months or so, because remember, everyone is looking at that December 5th deadline. Numerous undisclosed entities have been registered in countries like Dubai, Hong Kong, Singapore, and Cyprus. Beyond that, there will almost certainly be a surge in what is called ship-to-ship transfers, or STS. Now, these cargoes are being switched from one tanker to another, oftentimes at high sea. That's the result of both the sanctions as well as, of course, the need to collate fewer smaller cargoes to go into bigger, larger tanks for long-haul voyages. Now, while vessels often used to sail straight to Europe, Asia, particularly China and India, seem certain to become the top destinations of Russian oil after the December 5th price caps kick in. Once that happens, European seas will almost certainly be off limits for any of these ships and ship-to-ship transfers. For Russia or its buyers to do this inside the Baltic Sea is going to be fraught with risk. Ideally, any Asia-bound oil will have to be transferred onto giant super tankers that are simply too big to get in or get out of the Baltic Sea. Now, the initial vessel would have to turn around after discharging its cargo onto that super tanker and then come back to Russia for more Russian oil. Thereby, it creates a shuttling effect. These STS locations can then take the form of safe harbors that do not fall into jurisdictions that have sanctions against Kremlin. Now, while some shipbrokers floated the idea of possible locations like Gibraltar and Ceuta, some others do have doubts about these locations because these are, after all, territories linked to both the UK and Spain. Another STS transfer option could be in the high seas even in the middle of the Atlantic Ocean, where waters fall outside the maritime jurisdiction of European nations. There's an area in the mid-North Atlantic known as the Azores. It's an autonomous region but controlled by Portugal. While STS operations tend to be costly, there's an element of risk. The practice will be paramount in ensuring the continued flow of Russian crude. Because remember, logistically, as well as to try and help buyers keep their activities private, these STS transfers are going to be absolutely critical. While it's not uncommon for shipments from sanctioned regimes to undergo one STS, now shippers are not ruling out the possibility of 2 or even multiple transfers, one inside the Baltic and others outside of the high seas. Then there is the question of price. How much oil can Russia move and at what price cap? Remember, this price cap has to ensure that it is still profitable for Russia to move such huge quantities of oil despite all the logistical difficulties involved. In fact, the US Treasury Secretary Janet Yellen, she thinks that this price cap should be somewhere around $60 a barrel. At this cap, she believes there is enough incentive for Russia to move a large part of its cargo, while there will also be premiums which client states are willing to pay, anywhere between $8 to $10 a barrel. So we're looking at somewhere in the range of $60 to $70 a barrel for Russia to be able to move such huge quantities of oil every single day. Anything that is above or below this figure, Russia may find it unviable to produce such a high quantity of barrels per day for export reasons. That now brings us to the question of how much oil can Russia and should Russia be producing. Now, before this war began, Russia was exporting anywhere between 7 to 8 million barrels a day, out of which around 2.5 to 3 million barrels were being exported only to Europe. Now, after the price cap kicks in, most of that 2.5 to 3 million barrels would not be shipped to Europe. It would instead be shipped to Asia, to countries like India and China, which are huge client states as far as oil is concerned of Russia. Given the price cap, at most the world might lose about 1.5 to 2 million barrels per day, which means that even at 5 to 6 million barrels a day, it is still profitable for Russian companies and the Russian government to keep its oil in circulation without the price of oil going through the roof. Remember, consumers both in Europe and in the US are looking at a very harsh winter. They are looking at possible rationing of fuel and huge power cuts. This is something that would help them avoid precisely that nightmare scenario, thereby not making it uncomfortable for incumbent governments in Europe, as well as, of course, in the United States, to keep a bare minimum amount of Russian oil in circulation without such huge vagaries in the oil price and huge oil price shocks for consumers.